Good morning, everyone. Jen Tozer, your portfolio manager here to talk about what I think is on your mind, which would be inflation, the recession, and the bear market. Now, I'm going to cover quite a bit of technical today. I'm going to simplify it, and I'm hopefully going to get this done in about 3 minutes. So if you have any more questions, you know you can just call me. So let's talk about inflation. Yes, we have inflation. So what does that mean? Well, I'm going to tell you the two places that you should watch. The first is the housing market. In Toronto, for example, the housing market increased by 25% in the first 3 months of this year. That's inflation. Now let's look at oil. A year ago, a barrel of oil was $50. Today it's 110. That's a double. That's inflation. And those are pretty big rates of inflation. Did we get a response from the government? Yes, we did. What did we get? Rising interest rates. You know, we've seen them a couple of times this year. The last raise was 75 basis points. That's very steep. And I would expect that's actually going to work to cool down the housing market. It may not turn it into recessionary for the housing market, but at least the pace of growth. And then let's talk about oil. Do I think next year we could be standing here looking at $220 oil? I'm going to go out on a limb here and say not a chance. We already can see government policy out there to make sure that they can actually help the regular consumer with these high oil prices, and we're seeing policies that are radical, such as doing business with previously sanctioned countries, and Germany last week restarted its coal plants. So let's move on to a recession. Are we in a recession? Well, guess what? They're going to let us know 9 months after it started. And I know that sounds funny, but what a recession is 2 quarters of negative GDP growth, and it takes an extra 3 months for them to figure out it happened. So in September, they can tell us if we started a recession in January. So recessions make people think of lower profits, lower growth. That's correct. So what's that mean for the stock market? Well, remember, the stock market leads. The stock market goes first. And we know that today we are in a bear market. A bear market's defined as negative 20, we're down 30. Don't worry, your accounts are not down 30. But if you think it's been a long 6 months, it has been, because that's about how long we've now been in this bear market. A typical bear market lasts about 9 months. So I'm going to get the question that somebody's going to ask me, should we just sit out the next 3? No, because it could be short. In 2020, the bear market lasted 33 days. So what I can tell you is that we're quite a good way through it, at negative 30 from the peak to trough. I would tell you that there's not a lot more downside. I hope I'm right on this. I think they've got inflation under control. Is there any silver lining out there? Yes, there is. Bear markets are a regular part of the market cycle, as are recessions. And what they do is they flatten everything out, they create a sale, and when you look 5 years from now, you're going to look back at a lot of these stock prices and call it, I think of it as the summer sale of 2022. But it sets the stage for the next growth cycle, and we've seen it before. 2020, 2018, 2015, 2011, 2008. So we've already made it this far through. Hang in there. It will end. Call us anytime.